Hey everybody, welcome back to Milkshakes Markets Madness. My name is John Katsmita, and every week I am joined by Brent Johnson, the man behind the dollar milkshake theory. Now, if you do not know what that is, please visit milkshakespod.com and you'll find more information on our website. Also, at the top of our YouTube channel, which you can find at milkshakespod, you'll see a playlist that says Start Here and a handful of short videos that will help you better understand the topics and themes we regularly discuss on this show. Now, normally, Brent and I are one-on-one discussing markets and the madness of the world that we live in. However, this week, we decided to invite our first guest ever onto the show, none other than Hugh Hendry. This is a fantastic conversation and one that obviously went much longer than we normally do because Hugh is full of knowledge, full of character, and plenty of color, no matter what the topic is. So we really hope you enjoy this conversation between Brent and I, and none other than Hugh Hendry, the acid capitalist.
I drink your milkshake.
All right, everybody, welcome back to Milkshakes Markets Madness. We have a very special episode today. As always, I'm joined with Brent Johnson, but we have the privilege of also being joined by none other than Hugh Hendry. Hugh, thanks for coming along for the ride.
Little old me. Thank you very much, gentlemen, for inviting me onto your show.
It would appear that you are back in your island chateau. Is this correct?
That is correct. I am at the Maison Blanc Bleu. I am trying to decharge and become younger again. I'm looking for some recklessly silly behavior on the tropical island that is St. Barths.
Well, I'm glad you queued it up that way because it is one of the things I wanted to ask you. You know, I think a couple, maybe even a decade and a half, YouTube wasn't much of a thing except for maybe videos like the Honey Badger. One of the things that I always enjoyed watching was a old Hugh Hendry highlight reel, various appearances that you would have on TV shows, and it was always a fun watch. You were quite the character on television, as you still are today. But now that you've kind of transitioned into this kind of island lifestyle, how do you think it's maybe molded your personality, or how has it impacted who you are today versus back then?
Well, first and foremost, the honey badger sounds really quite intriguing. I mean, where do I find that? Secondly, I moved to this island in 2015. It is now 8 years, and I was kidding aside. I feel 10 or so years younger being on the island. You know, it's God blessed. It's beautiful. It's a bit of Galt's Glutch. I think, is that how you call it? Glutch, Galt's Glutch, or whatever. You know, it's that mythical place where successful people come. There's always new people coming through. There's always a conversation to share, anecdotes. But the beauty of nature. I mean, I was tired and fatigued. There is no light that comes into the brain. The brain is a dark chamber. And it's very reliant on what we tell it. And the problem, I was tweeting the other day, you know, I start my day with a brain hack. I had the great fortune to meet the happiest guy I've ever met, and someone who'd won Olympic gold medals. And he introduced me to a very, very simple breathing technique. And when I do it with him, it's unbelievably powerful, and I literally feel as if I'm levitating. My body's coming, you know, unchained. When I do it, I've got to microdose a little bit, but just a little bit. And we became, you know, worker ants. You know, back, I don't know, the Egyptians, when they were building those like dope pyramid things that we still can't understand how they did it. Like, each person was a god. Deity lay within us. But it was overrun by empire builders, and they needed worker ants. And so we had to, you know, it's the Matrix. We had to kind of go, you know, and we had to change the configuration. Well, we work for the brain, and the brain doesn't work for us. So this is one of these places where I reverse that. But like I was saying in the tweet, by the end of the day, I've had like a billion voices pass through my head, and I end the day a slave. I can feel serfdom approaching as the sun's going to set, you know. So, but that'll be tomorrow. But with regard to those billion voices, managing risk, actively managing risk on behalf of other people, my brain's just dumb. It doesn't, like I say, it's reliant on what I tell it. And I was saying, I'm gonna die. Oh my God, they've got me. There's no exit here. And I was getting flooded with grotesque chemicals to kind of deal with that. And so I needed a retreat, and I needed to just kind of heal a little bit. And I did so. And of course, you know that really for about 3 years or so, I found my voice, and I'm back, and here we are, and we're having this conversation.
Well, Hugh, I have to say, to John's point, it was always kind of fun to watch, some of your old clips, and, whether you were being interviewed or whether you were presenting, and some of the comments you would make. You never really seemed to be constrained, and you were never a typical, Wall Street guy or a typical city guy. And so I guess one of my questions for you is, were you always a little bit constrained, even though it didn't say, because, in many ways it looked like you were unconstrained, but I'm wondering if you were actually constrained and we just didn't know it. And now that, you're no longer in the position that you were before, and you're a little bit more free to, it's not that you ever really held your tongue to begin with, but now you're even more free than you were before. I'm just curious, do you feel a change? Or back then, were you constrained and we just didn't realize it?
So the notoriety that I gained really was from quite a way back. It would have been clustered around 2009, 2011. 2011 being the European sovereign crisis. And I was very prominent. I took down Stiglitz and others, and also I was angry. The torturous journey of 2008, the lies, the deceit, the ignorance, and I wanted. I was kind of the former Treasury Secretary, Andrew Mellon. I wanted to purge this system of its rottenness. I wanted to burn the damn thing down. And that was a mistake. And that comes out in a lot of my commentary now when you see idolatry and kind of religious kind of the way people invoke a sense of belonging to asset classes. One's as bad as the other. But no, I got taken down after that because despite my track record was, I want to say it was good, came out of the blocks with a 50% gain in 2003 with gold, had double-digit returns. I made the 32% in 2008. And there I was 5 years after starting, and I got bled dry. I was down to my last, in terms of fund, AUM, $50 million. And people approached me and they said, yeah, maybe 50 is your size. You're a bit damn crazy. But there is a formula. If you want to manage, let's say $1 billion, we can make it happen. But there are consequences, and the consequences largely were that they had to remove me from that equation. And I spent a year, 18 months in captivity. I felt like the man in the mask, the 3-4 musketeers, and the King of France has got an illegitimate son with the chambermaid, and it's a secret, and so the poor kid's like, that was me. But the hack was true, and I, fund wise, I got to about $1.5 billion. And it was Dickensian, the best of times financially, and the worst of times creatively. I was known for an investment letter, a monthly investment letter, and by the end of that, it just became zeros and ones. It was just a factual recording of the mediocre performance from that time, and I ended up on antidepressants. So the person you see today is the person that did get captured by others, that did follow a false god, and it only brought unhappiness. And so part of the, if there's wisdom in that, I definitely like sharing, and that's why I'm loving being, I don't have any clients. I mean, I've lost my life partner. She couldn't take it. I'm getting divorced. She preferred, if you look at the pictures and you see the guy with the suit and the short hair who looks like 10 years older than me, she liked that guy. But me, I like being a rock star. So, so that there is collateral damage. But ultimately, if you're not people are watching this, you got to choose you. If you compromise on you, at some point you're going to regret. The money will not be the solace. You will wake up lonely and depressed. And so I wouldn't choose that for anyone else. And that's why I try and be very transparent and open about
it. Hugh, speaking of kind of this rock star analogy that you used, and kind of the point that Brent was focusing on and you just described, do you feel like you're now tapping into some of those influences and those who've made a big impression on you? And if so, both investors and, let's say, artists or musicians, who would you say has had the biggest impression on this, true Hugh Hendry spirit that's now flourishing?
Yeah, I mean, the asset capitalism is many things. At its core, it's a preposterous idea of trying to make finance cool. I mean, give up. Okay, it's like golf. Golf is not cool, guys. It's like really, really bad. It's misogynistic. It's the fashion is appalling. But and finance is the same. But to try and offer a different perspective, I likened what I was doing to, I had a blank canvas, and I was detached from the London financial community. I was in the kind of bohemian neighborhood of Notting Hill. I sat at home, I played music, and I kind of looked at charts and I read magazines, and I had coffees, and I just hung out on Portobello Road. But I was seeking to conceive of a contentious narrative with the belief that it could become an accepted belief system. That's how I'd make money from it. And I was looking for wealthy patrons that wanted to sponsor that. And that's really how you describe the work of an artist. It could be poetry or written verse, and of course it could be the painting. It could be I was 2 nights ago, I was watching Francis Ford Coppola's wife's, the documentary of making Apocalypse Now. I spent 90 minutes in the company of genius, and how rare it is now to have that opportunity. Someone that didn't fear being wrong, which is remarkable. But so it's a lot of that. It's trying to say, look, you don't have to be the suit guy. Being logical, they've told you, is the way forward. It will take you to a cul-de-sac, and you'll find your limits. So I'm trying to offer myself that. I'm trying to reveal how I do things. Sometimes I get glimpses of the future, and there's a lot of today as the foreboding of what I saw 15 years ago. As I'm trying to explain where those influences are coming from, and if it comes to pass, then it's going to give some. If it comes to pass, and God forbid, but it will give some credibility to the notion that you can be loose. It's okay. You don't have to be like the other guys and girls, But music is wonderful. Your music is, I tried to get involved in the takeover of EMI, the music company, with the Beatles back catalogue and Queen and the Rolling Stones and what have you, back in 2005, 2006. EMI was, it'd been destroyed by the internet and by Napster and whatever. And they were giving the music away for nothing in terms of the stock market. It was priced as an annuity and not a perpetuity. And I was saying this is preposterous, because music is culturally so important. It's a time capsule. It allows us to store data and information from the past and bring it to the portal of now, and it's very, very powerful in my creativity. And so you'll find that I'm always, playing music on videos that I share and stuff. The other thing with Twitter, which I think I'm not sure how many people have recognized it, but Elon's changes with the platform. The platform was very, very poorly managed. The idea of a platform is all eyes on the platform. Whereas Twitter, you would come in with like your link for this show and you go, hey, Mr. Twitter, leave here. Here's my link. Here's the pass, and join me over here. And Elon's like, guys, no way. Yeah, if you put links, right, my algo is closing you down. So I don't do that anymore. And he's giving you, for now, he's giving you about 10 minutes of high resolution. He's like, put it on here. I want eyeballs on here. And the app of all things, Twitter now is my Instagram, it's my YouTube, it's where my audience are. So, and I've enjoyed some success now. I'm beginning to get some traction. So, anyway, it was my guilty secret. I could spend a whole day imparting kind of thoughts and stuff, and then I'd be lashing myself, saying, "Oh, you sinned! What have you done today? You haven't done your paperwork." But I think I did a lot.
Well, I remember, and this actually had a big impact on me, and I actually remember being mad about it, and it took me a couple of months to kind of realize that you were in the right and I was the one that was wrong. So I'll let you in on a little side. So I used to read your letter back when you would write it, and I would always love reading your letter because it was always a little different and kind of made you think. And I didn't always necessarily agree with it, but it always was interesting. And then I remember it was probably, and you were kind of railing against the system, and I was kind of railing against the system at the time. And then I remember somewhere, I think it was around 2015, 2014, 2016 timeframe, where you had gone on vacation to St. Barths, and you came back and you were like all zenned out, and you were like, yeah, I'm no longer bearish. I'm no longer upset. And you kind of changed your whole thing. And I was like, wait, what? And it kind of forced me to, and I knew that you were like a thoughtful guy and a smart guy. And so I had to be like, that doesn't jive with what I'm seeing. What is he seeing all of a sudden? And around the same time, Raul had made a call on the dollar in 2014, and I thought the dollar was going to go lower. He said it was going to go higher, and it rocketed higher. And I was like, well, how did I get that so wrong? And so those two, his event and your event, kind of made me say, well, hold on a second here. So here's my question to you. Like, what happened on that vacation back in whatever that was, 2014, 2015, that made you kind of come back and rechange your whole view?
Well, the first rule of the Fight Club, but what happens in St. Barths stays in St. Barths.
Okay, fair enough.
But you're referring to my letter of December 2013.
Okay.
I'd like to remind everyone that the S&P was 1400. And
yeah.
I invoked a character from the HBO series Entourage. And there was a character there, and I think he'd made The Sting with Robert Redford, Paul Newman. He'd done something, but it was a long time ago. It was in the 70s, and ever since he was prone to kind of making like hyperbolic statements, like, "Yeah, what have I told you? This movie, Smoking a Cigar, it's going to cost you 40 million. The revenue is going to be 400 million. We're going to win three Oscars. Is that something you'd be interested in?" People are like, "Yeah, whatever. Like you're the guy that made money like a long time ago." That's 2008 felt a long time ago. But like I said to you, when I had kind of hit the heights in social media and on television in the UK in 2011, I was full of anger, wanting to purge the system, and I came to recognize that I was wrong. I was wrong, that actually I was effectively repeating the errors of Benjamin Strong et al. From the late 1920s, or if we were to invoke Williams Bryan Jennings, I was, the hard monetarists that wanted to crucify the common man, on the strictures of philosophy and hard money. There had to be a better way than have 20% plus adult unemployment for a decade. And if the cost of avoiding that was that we kind of had to look the other way, and some of the scumbags actually got a pass, kind of better than that poverty of despair that would linger. So I tease the Fed and I say, like, when did they, the thing of Life of Brian Monty Python, what did the Romans ever do for us? When the guy's like, well, like aqueducts, they're pretty cool. Sanitation. And someone's like, the wine's really good, and etc. But when did the Fed last do something for us? And it's a bit disingenuous, but you could say that Bernanke, when he toasted Milton Friedman on his 90th or 94th birthday, he said, "We will not repeat that error." And in March 2009, they summoned the great gods of psychological warfare, and they said, we're going to do this extraordinary thing called quantitative easing. And if it did anything, it altered the risk mindset, and a system which was precariously resetting to zero was pulled back, and we're not at zero. And I think that was the right thing to do. Unfortunately, it requires a lot more smart and right things to do, and we haven't had the follow through. And actually, despite it being the right thing, the shocking news is that for the average American, the last 15 years from that late 2008 period to the present, in terms of per capita US GDP, the growth rate has been only 25% of that enjoyed or endured during the 1930s. Per capita US GDP from a base of 100 has gone from 100 to 118, and over the same time scale, it went to 180 during the Great Depression, which of course 15 years would take you to the end of the Second World War. So, yeah.
Well, before I forget, I want to come back to this just a little bit. When you came to the realization that you needed to either change your view or outlook, however you want to describe that, were you surprised? Like, did it surprise you, or was it kind of like a long time coming, and you finally just submitted to it?
Well, there's always drama in my life, and the guys who'd come in and turned me into this big platform with $1.5 billion of AUM. They read my letter with great horror, and they said, if you print this, the money's going to leave. This is something you might want to consider. And I just like, where's the send button? Boom. And it went. I was fed up with it by then. But my reasoning had been, the balance of probabilities for me looking at it was, I could not see the role, the purpose, the utility of a macro hedge fund like mine at that point. Now, my hedge fund was particularly different. I was set up to be very low correlated to everything, to be orthogonal. Like if the world's going that way, I'd be going that way. I was not set up to make 20% per annum. I wish I was. But I couldn't see what purpose that fund would serve. It would only serve a purpose of making me feel miserable, and I'd spent 2 years being miserable. And so my best estimate was the present trend was likely to persist for the foreseeable future. And clearly that came to pass, but it was met with mockery. I remember the headline, "The last bear turns bullish." Ooh, such is life.
Hugh, when you're talking about what Brent just mentioned, this transition that you went through, and you reflect back on that period of time where you just had this deep anger, when you're looking at people in the market today, it feels like that anger has been passed on to a whole nother crop of people, whether it's gold and Bitcoin hard money advocates. There's obviously this real deep resentment for the Fed. It's never gone away since the GFC. But is there something that you can reflect on or share that when somebody is in that moment, whatever's going on inside of them ends up shifting their perspective? Was there something that you did to help you pull yourself out of that and be able to take a more pragmatic look at things as you're doing now, where you don't have this deep emotional connection?
I suffered. 2009, 10, 11, like 3-4 years of mediocre investment performance because I put a filter of anger or emotion in front of me. When you enter the investment room, enter the room without prejudice. In some respects, it's the hardest thing to do. I buy things going up and I sell things going down. I promise you, I will buy anything that's going up. And I'm also, the other thing that people don't get is great investors are cowardly. I never short things. I mean, I try not to short anything, but back in the day, I never short highs. I short new lows. I don't buy lows. I buy highs. It's not what they teach you. So, yeah, my great regret and I'm seeking redemption. Silly expression, perhaps. It alarms me that I put it that way. Message to self. But a regret of mine is, the S&P fell 60%, or just about, rounding up, to the lows in 2009. Okay, it's a buy. It's a buy. It's always going to be a buy. It dropped 60%. Wake up and buy the damn thing. Mean reversion. Mean reversion does not. I mean, if you look at 3M in the Dow, right? It's trading. God, no, it's so low. It's fallen so low. I've got very slow moving averages, 50-month moving averages below that. Individual stocks, individual risk is too idiosyncratic. It does not respect mean reversion. But I live in a world, a macro world, which it's like a compass and it has 4 macro points. It has S&P, it has treasuries, it has alternatives. So it could be the gold price, it could be the Bitcoin price, and it has currency pairs. They all respect mean reversion. And I have persuaded myself that there's profound mean reversion in the long dated treasuries, and it's displaying a similar setup, I believe, to the S&P in 2009. That it spent the last 6-7 months not making new lows, but oscillating sideways, and at the same time, of course, it's given back the 15 years of price gains. They can't give you back the income, but you're back at price levels that prevailed pre-2007. And I just believe that the nature of how the world actually operates, and largely if you want to explain asset prices, you have to understand international trade and the nature of either open or closed capital accounts. This is the quantitative easing, it's not the Federal Reserve. That unless we're going to close the American capital account, which ain't going to be in the next 5 years, I believe, then mean reversion will come in. It'll be very powerful again, and it'll lift treasury prices higher. So it's a redux, if you will. I waited a long time to try and rid myself of the sins that I committed in 2009.
Brent, you're muted.
Sorry, I apologize. I muted it because I was experiencing one of my favorite parts of Puerto Rican culture when they pull their car up right outside your apartment and blast the radio at ungodly high decibels. So I didn't want to share that with you guys, but
I thought
John, you know what I'm talking about.
I thought you were doing what's he called? The guy from The Office.
It was Brent too, right?
We're going to do something dancing or something, but
well, I guess one of the questions I had for you, Hugh, is along those lines, the one thing that didn't happen in the U.S., which happened everywhere else, or sorry, I should say, it didn't happen everywhere else, but it happened in other places, was that U.S. Fed did not take rates negative. Europe took rates negative. Japan took rates negative. Do you think the Fed will ever have to take rates negative, or do you think they would trade negative on their own?
So I'm not a great believer in the word never. I don't like it in my lexicon. I can conceive of an environment where that may be necessary. My retort to those who are very accepting of today is debt to GDP is 4x, and there is simply there is no textbook, there is no guidebook to how you grow an economy. How we have to address GDP has to be, that ratio has to be less than 4. It was the last time it was 4. We had the bankruptcy of the banking system in 1930, and 40 years later we got it down to 1.3. Yeah. And you've got to think that that's the path that we're on again. And you don't get there with positive real rates. We call it financial repression. You need 40 years of zero or negative real interest rates. Yeah. And so it's possible. There's a genius about the private sector, and we can jump around a bit. But the MMT school has a validation of sorts from Japan, because there's the big scare just now for a lot of folk. The thing that sounds very compelling is, oh my God, the debt ceiling's over, and they've got to issue lots and lots of paper, and yields are really going to take a beating, or the price is going to take a beating because all of the stock overhang has got to be met. And again, there's the constant fear of the bankruptcy of the US government. And Japan demonstrates they went from 40% debt to GDP to 240%, without any credit downgrade and without any hyperinflation. So you can take the ratio today is what, 120? Why can't the ratio be 220? In the short term, the supply overhang thing, Say's law, that the environment that creates a need for the Fed, or the Treasury rather, to issue paper, is actually an environment where the economy is either slowing down, it's perilous, or where actually what you find is that the risk culture from those who buy the paper has turned risk averse, and it's exactly what they want to buy. And the maxim of Say's law, that supply creates its own demand, typically comes to pass. We might have some volatility, but it comes to pass. But the retort to that, so yeah, you can take your balance sheet almost to whatever level, especially as the US government, I would argue. And you can take, and the notion, could rates go negative? Conceivably. Because the hardest thing to change is the kind of wisdom of entrepreneurs, to convince them that things are better. So Japan said, hey, look, we're going to spend 200% of GDP on anything. And the wise business folk went, yeah, but you're not creating wealth. I'm not interested. And so they've been in the malaise for a long, long time. And you could have an environment, and another example, forgive me, is quantitative easing. There is $9 trillion of bank reserves. Bank reserves could be money. It depends. It depends on the psychological willingness of the banks to step up and say, yeah, I get this. Wow, right. I'm going to lend it. I'm going to have a party with this. And what the Fed misunderstood is when risk aversion sets in, the banks are like, I have no need for this, and so it sits there inert. The banks, there's a deficiency of global demand and a surplus of global savings, and it's all because of the system of major economies like China having closed their capital account. And so that effectively, remember, China is supplying the world with a profound surplus of manufacturing capacity. So as a deficit nation like the US, that is disinflationary or deflationary, because you are receiving imports. And as you measure GDP, an import is a subtraction from your wealth. So you are submitting to something which is bad for your economic health. Yeah. And normally that would be rational, because you're willing to take a kind of short-term hit because the other guy, the surplus country, is becoming richer. And with richness, perhaps you get less of the polemic and the crazy communism or fascism or totalitarian. They become more, democratic. And they finally turn around and they buy your exports. Okay? But that's not happening. China's like, okay, so you took our money. You thank you very much. You addressed, you bought all that kind of cheap rubbish. We are going to buy your financial assets. So we've got this system just now where it's designed to produce asset inflation and wage disinflation. That is profoundly disinflationary, if not deflationary. It's deflationary now because the Fed and the other central banks are trying to squash wages at the same time as this grotesque trade thing is happening. And it could be very bleak that you might need negative interest rates. People are like, I don't want money. I mean, why do I want money? I don't want to take risk. This system is broken. System is broken. And step by step, more and more people are coming to recognize it. The Eurodollar system. Eurodollar is like, I was bullish, but I mean, there's just no demand. The world's crazy. So anyway.
Well, kind of along those lines, you touched on obviously a pretty sensitive subject with the bank reserves and whether they're money or whether they're not money, and they sort of are and they sort of aren't. I'm convinced that that's a topic that's never going to be fully decided, and people are never going to agree. But one of the questions I always like to ask people, and I'm going to ask you now, is what is your definition of money? And it sounds like a very simple question, but the reality is when you ask people if they know what money is, everybody says yes, of course. But then they'll tell you what it does, what they use it for, what it looks like, what it's made out of, but they'll never tell you what it actually is. So, in your opinion, what is money?
Well, the money for me is the part I focus on personally as a medium of exchange. It lets me buy things. Money is very definitely not a mechanism for me to accumulate wealth. That's called assets. And then we could go on and we could add on a whole different subsector of utility functions for money. But I am seeking two things. I'm seeking a float of cash money that enables me each day to basically throw my phone at someone and it zips. And I'm looking for an attractive collection of asset opportunities for me to further boost my wealth.
So do you think that money has to be a store of value to be money, or is it possible, or is it necessary?
I did not say it was a store of value. I specifically said it's a means of exchange, and if you value is wealth, and I said I have a whole menu of assets to choose from to allow me to be a wealth builder, or whatever the term is you use. So money is distinct. Bitcoin is just something that goes up and down, and it allows for speculation in terms of my interest. No different from gold, no different from commercial property. Maybe different from commercial property because there is a degree of fundamental analysis that one can apply there. The other two are kind of, they're kind of faith. I don't even want to say faith-based. They're more like they're objects of art. And art. Okay,
so when it comes to the dollar, right? The many people for years and years and years have said, the dollar is going to lose its value. It's going to be rejected by the rest of the world. We can't run deficits forever. The debt's gotten too big. What in your opinion, why hasn't it happened, and what mistake are they making when they say that?
What mistake are they?
That's a very simple question. You should be able to answer that very quickly.
Oh, thank you very much. What mistake are they not making? Well, unfortunately, there are only 5 people in the world again. There are only 5 people in the world that actually understand shit. All right, that's the problem. The knowledge is not widely disseminated. There has never been a reserve currency. This dollar thing is exclusively a function of, I would say benign, I would say increasingly stupid benevolence on the behalf of the US administration. But the dollar, or this reserve currency status of the dollar, is entirely a function of the last 50 years witnessing the industrialization of China. That China has pursued the path of the 19th century American economy, and which is to say that domestic investment opportunities were enormous and far greater than domestic savings. And in America, the solution to that, the classic solution to that, is to run a budget, to run a trade deficit, and to have the rest of the world. And in the 19th century, that meant London banks pour their savings and buy claims on your activities. And that was fantastically successful. And the most recent great example of that was South Korea. And South Korea came from poverty to being as rich as we are. And I think 38 out of 40 years it ran a trade deficit. Not a huge trade deficit, but a persistent trade deficit, because again, the investment opportunities were far greater than savings. And so the flip side of that is that you need an open capital account and the rest of the world invests with you. The alternative way of doing that is what Stalin did in the 20s and the 30s. He did industrialization, but he was cut off from the rest of the world. London banks and Wall Street weren't going to finance the Bolsheviks or Stalinists or whatever. And so it had to be funded by wealth transfers from within the domestic economy. And the transfer was trading the breadbasket, the considerable agricultural resource of Russia, was traded with Nazi Germany for the capital transfer, for the technological know-how to allow them to scale at the industrial level. 30 million? Lots of million Russian souls impoverished. They died of starvation in a country which was the breadbasket of Europe. So that's the other way of doing it. It's an internal transfer, because you got to rob a community within your domestic economy in order to pay the bill for the industrialization. Because investments are greater than savings, you got to manufacture it. And China in the last 50 years is somewhere caught between the two. It's a profound wealth transfer away from its domestic citizens. China's gone from 1 trillion to $18 trillion of GDP, and its currency, I call it red cabbage. 40 years ago, you required 6 red cabbages to buy $1. Today, you require 7.3. And people go, I don't know what you're talking about, but what that means is 1.4 billion Chinese people should be a hell of a lot richer relative to us than they are. And if they were, they'd be buying lots of the cool stuff that we have. And wages would be higher, and corporations would be saying, wow, look, God, I'm getting wage cost price inflation. I've got to invest, got to boost my productivity. And that'd be cool. And then they'd also be saying, oh my God, my revenues are up like 15%. I need new capacity. I've got to invest more. And we'd be in this virtuous circle. Whereas now, compare and contrast that. GDP is a function of population growth, 0. Productivity growth, 0. And so the only GDP that we have, again, is the impoverishment of the general folk, which is debt growth. And debt, so you know that it's like we just know if GDP in the US is going to grow at 2.5%, we know that debt to GDP is going to go up 5 or 6 or 7% that year. And debt is a liability, and every extension of a liability is matched by an asset, and so you're going to get asset price inflation. So this again is this perpetual monster which impoverishes households. Thankfully, no one's quite starving to the scale of 30 million people dying, and it's a system where debt will be higher and asset prices will be higher. And so again, when I come back and I look at treasuries and they've lost 15 years of price gains, it's going to be bought, but it's going to be bought under the most awful goddamn circumstances. But anyway, I'm losing it now.
Is there a functional difference between the rest of the world buying treasuries and 200 or 300 years ago paying tribute to the king every year?
I think of it more as I must flesh this out more, but the stock of treasuries for me is like the stock of gold, ever mined, and to be mined. And annual gold output, I want to say, is usually about 2. Like there's new fiat currency, if you will, there's new issuance of about 2.5% every year. And we were on a gold standard, which was predicated on, on that tightness. And I think the treasuries for the longest time were like a supply of gold. And then it got lifted by the Eurodollar, the offshore banking system. And it became really elastic in the sense that, and what I mean by treasuries being the gold, and so a treasury standard, I mean that as you present your digital treasuries at the repo, at the Eurodollar offshore market, and let's use better language. Think of the Eurodollar system as the pawn shop. Yeah. And every day you got to get in there before midday. And if you go in with $1 billion of treasury bills, they'll give you, they might even give you more than $1 billion of newly printed dollars. Yeah. But they'll say to you, you get your ass back here in 24 hours time, because I might need it. I might call you in, And of course, what we know is that when times are better, when times are more ebullient, when people are more cyclically bullish, you can go in with $1 billion of, the 7 S&P stocks, which are going to the moon, baby. And you go to the repo guy or the pawn shop guy, and he'll give you $1 billion of newly printed cash. But when at the margin, the offshore banking sector just loses its risk tolerances, it starts climbing the collateral. Every modern recession begins with a crisis of confidence in the collateral, and we operate in a very elastic system, which is they'll take anything. They'll take stocks, they'll take Chinese property bonds, they'll take God knows what, like an Indian rupee, they'll take, and you come up and you get closer, they'll take Italian BTPs because there are no boons. There's only 15% of all boons ever issued are in market hands. The 85% is held by the ECB, so they're not liquid. And you'll get to a point where they're like, no BTPs, we want dollar cash bills. And I think that'll be a point where you'll see the dollar appreciate below the 100 level, or the 1 mark against the euro. So where am I going with that? Currency should be elastic. They can be too elastic. That Eurodollar system has allowed the money, the surplus savings that come out of the mercantilistic nations to actually be multiplied. We know $7 trillion is being held on behalf of sovereign accounts in treasury bills, but actually the amount of money that created, because it served as collateral with the repo man, is 5 times greater, and it's the power which has propelled the stock market to be 200% of GDP. The gold market is $12 trillion. Gold is what, 50%? It's not. It's what, 35% of US stock market capitalization. It's that power. And I want to stop it. I want to close the capital account. But in doing so, you would have the mother of all really nasty recessions. You would be in an environment where you might have to invoke negative interest rates. It would feel like Mad Max. But at the end of it, because we're going to have a shocking downturn over the next 18 months, And then we'll just be ready in another 7-8 years time for more bank folly. We build a volatility machine because debt will be 500% of GDP, and then someone will mess up and it'll go down again. But again, no one's listening.
So Hugh, okay, so along these lines, let's pretend we wake up tomorrow morning and the Federal Reserve no longer exists. Do interest rates go up or down?
Interest rates are set by the market. We have a yield curve inversion because the market obviously knows where the natural rate of interest is, and we get inversions when federally appointed money has the audacity to be priced above the market rate, and that's where we are today, and we break things. So the Fed, in the bastion, capitalism is the least bad, the whatever, best worst, system. I kind of like it. I would say that. But why on earth do we have a Politburo of 12 old codgers who sit around and go, oh, I'm thinking, and it'd be kind of fine. It would be kind of okay because you say, geez, they're staffed by about 500 or 600 or 2,000 PhDs. But they're PhDs in a pseudoscience. Economics is not a science. If you listen to Lacey Hunt, and Lacey's a national icon and great thing, but he just quotes dead economists, dead people. They only understand money in papers last written in 1932. There's been no advancement. If you have to talk about velocity, then you are kind of missing a huge chunk of the monetary puzzle. And I don't mean that to be mischant or mean to Lacey. I have tremendous admiration for him, but it's the Fed money. We were talking about Eurodollar. We were talking about the ability to present collateral, acceptable collateral, to banks outside the frontier of the United States, and they will print a US dollar. They will print a US dollar. That printing of US dollars, I don't know. I want to say it's 2, 3, 4 times greater than the printing of US dollars that happens onshore. When a bank,
it's a lot higher.
Yeah, and why don't we know? Because no one cares. The Fed's like, okay, I'm responsible for these dollars onshore, and I tell you, it's difficult. I spent all my time trying to control it, and you're asking me to look over. I'm like, I'm too busy.
Well, I think it's that benign neglect you were talking about, right? They know it's there, they know it exists, but they're happy to turn a blind eye because it creates increased demand for their paper, and in the meantime, they can continue to do what they do domestically. But you're right though. When it becomes a problem, it ends up in their lap eventually.
Yeah. Now, where you need a central bank is the back hot thing about, our system is one which pushes to extremes, and there will be an extreme Bobby Digital moment again where prices fall. And if there isn't intervention, they could fall to zero. And so you need a well-supported central institution that can step in and buy good assets. Not every asset, but the good assets, right? And the Fed or some offshoot of the Treasury should be responsible for that. And I think you know what I'm going to say next, but that's the refinement that we need for that, because it's going to happen again. The conspiracists from 20 years ago used to talk about the Plunge protection squad. There's a Plunge protection squad, and we should set it up today. And it should be a sovereign wealth fund underwriting the future prosperity of the disenfranchised citizens of America today, those who do not own any assets. There should be a means, this is a personal view, there should be a means trusted facility for entering a trust. And then when, I think the S&P could lose between 20 and 30% from these levels. If it did, I'd want to buy it. But there wouldn't be that many wanting to buy it.
Well, I guess that's what I'd ask you. If you were the head of this sovereign wealth fund, what's the first thing you would buy?
Today? Or
today.
Today? Oh,
today.
I can only talk my book. My largest nominal position is, the long end of the bond market. It's not my biggest risk position. I only own treasuries just now, in with asymmetric call options. There's no trend. I
Yep.
buy things going up,
Yep.
but I'm putting an intellectual marker. You know, the S&P had fallen 60%. It looked like
Yep.
it was done in March 2009. But so that's I want that to be my biggest risk position. But if you think of the TLT, the ETF expression for the bonds, I don't know. It's got a 9 handle. It has to trade through 110, and then it would be my biggest risk position. My biggest risk position today is Bitcoin, and it's
I
the
didn't
biggest.
know that. That's interesting. I didn't know that you had jumped on the Bitcoin train.
I haven't jumped on any train, but I'd have a 20% allocation.
Okay.
But yeah, the realized vol is still in the 30s, so that's a big position. And why? Because it's another global macro compass point. Mean reversion is harder to call because of the paucity of data. You know, there's only 13, 14 years or whatever price data.
Yeah.
But within that context, you know, it's lost 65% of its value. And I'm a sucker, you know, the loathsome Grayscale trust. It does own the Bitcoin. It does own the Bitcoin. And I'm a fantasist that believes that Gary Gensler will be kicked out in the next 2 years, the head of SEC, and they'll find someone who'll turn it into an ETF. And as you turn it into an ETF, money will flee that robber baron ship that charges 2% management fee for a passive fund. But you know, it's a no-brainer. I'm down 65%, and I can buy the underlying asset at a 40% discount to NEV. And I think at some point it will get converted into an ETF. Boom, you know. So
you're buying GBTC?
yeah.
Okay. Okay.
You had talked about in a crisis. Crises occur when there is a lack of trust or faith in the collateral. You're also kind of putting your eggs in the basket to some extent that there will be potentially aversion to mean in treasuries, or at least treasuries will perform because in a lot of cases they are collateral. They are the gold of the modern era of our economy. And that's the risk off type of trade that always tends to perform. Now, in that situation, you see a lot of other correlated, we'll call it credit assets, follow along suit. And what I'm thinking of specifically is mortgage bonds. And I think the Fed probably made a huge mistake by juicing the mortgage bond market as much as they did the last 2 years. And that created this huge asset inflation in the housing market. These are all things that you've kind of talked about, not directly towards housing, but kind of referenced in the things you've been talking about here. The thing that I think impacts the retail market the most, primarily because the only asset most people in retail own is real estate. Now, everyone's frothing around the fact that we're in a bubble and it's going to crash, but it also feels very much like the things that you're talking about here, where as long as the debt keeps growing, asset prices are going to keep growing. And if we come into a crisis and the underlying collateral that everyone is trusting is treasuries and bonds, do you think that the slow moving price action of housing is saved by the fact that interest rates are likely to decline so rapidly in that crisis moment that we don't really see any kind of big pullback in the real estate market?
No, you're going to get a pullback. I spent, I don't know, 4 or 5 weeks staying in Utah and staying in Park City with the Mormons. Really hard to get tequila, and that's been a super hot property market because, you know, it's so easy to get to Salt Lake City, and then you're like an hour in the car and you're in, you know, beautiful countryside, and really, you know, super rich, you know, low crime, you don't lock your doors, everything, you know, people have been buying everything. And, you know, with a buddy, I was looking at this, is it Zillow? I was looking at the map, and everything's for sale. Everything. And you look for, you know, give me the transaction in the last 6 months. Zero, you know. And, you know, like you look, the prices have been robust, let's say, because there are no transactions. Yeah. I mean, the fearful thing for the banking sector, of course, is you've had 4 significant insolvencies without the inevitable credit. Rising credit is what takes out banks. We've taken 4 without rising credit contagion. So, and then the other thing that I thought when you were talking was the Fed's in no hurry. Fed's in no hurry to cut rates. So I think it'll actually require people getting to the end of their tether, as we say, like, I've been waiting. My God, these guys are never going to cut. I need the cash, So I'm pretty fearful just now. The market doesn't want to go down. The Fed doesn't want to cut rates. If anything, it wants to hike rates. Jamie D's been telling you, hey folks, I think they're going to do it again. As if he would know.
Yep.
And so I think let's end the question. I think house prices will be a bit like Hemingway and the notion of bankruptcy. It feels really, really slow, really, really slow, and then really, really quick. I think they'll kind of have a gap down. Markets have to be cleared. I think there'll be a clearing in markets.
Well, Hugh, you've given us kind of your perspective on markets and stuff. What's your just take on the world in general? Forget markets. John and I, we started this channel because we would have these weekly conversations, and we would talk about markets, and we would talk about just the madness of the world, and we would just laugh about all the crazy stuff going on in the world, whether it was social media or whether it was the world of politics. Or is there anything going on outside of financial markets that you find especially interesting or funny or just maddening right now?
For me, popular culture and markets, I live in that kind of Venn diagram where they overlap. My stimulus and my understanding of markets comes from the entertainment of my mind through other pastures. The asset capitalism is partly a rebuke to the present system that it's so goddamn dreadful that you got to be super stoked just to kind of avoid thinking about it, and also the asset capitalism is, like I said, I'm trying to kind of create some resistance to the inevitable appeal of Marxism. The kids today are saying, I ain't going to be richer than my parents, and that's when you turn around and you say, shouldn't we talk about now the redistribution of the income? And so asset capitalism is like, get your hat, get long human ingenuity. We're bringing in AI, we're bringing in whatever, and we're not short human ingenuity. We will bust this thing, we'll take it forward. Talking of AI and culture, my buddy made me watch this goddamn awful Steven Spielberg movie. I'm not a huge Spielberg fan. Jaws was amazing. Everything else feels like the Hunger Games. And I don't know, what was it, Ready Player Steady Go or something, but it was kind of dystopian view of the metaverse. And let's just pause there again. Life is so grotesque today for the majority that they've got to zone out by taking opiates. That they're taking cocaine with this huge risk of it having the fentanyl, but they're still willing to do it, and it's just a measure of how goddamn awful the world is. And Zuckerberg was too early. I think he needed the AI. When you think this telephone wasn't around 15 years ago, and now what the difference it makes. 15 years time is just like there, and I can see the appeal of like metaverses and stuff, where I can still people being, unless we close down the capital account, the income disparity will be even greater, and you won't be able to. You'll be living in sheds, and the salvation will be a cheap Wi-Fi broadband link, and you can take on your avatar, and you can be. If you're a girl, you can be blonde, brunette, 6 feet tall, you get long legs, small boobs, big boobs, whatever. You can fight Godzilla, you can drive sports cars. And what a dreadful, dreadful dystopian, but it feels inevitable kind of lurch that or journey that we're on. I wish we could counter that. But you know, and the other thing is, again, it's finance, but it's culture. But this phone, we've always hated banks. Now we can destroy banks. Like, boom, you're dead. Yeah, that banks, the banking model is dead, right? Banking worked because deposits don't move. You know, the worst drawdown on deposits would be what, 1-2%? What was it? Something like 20% walked out the door of Silicon the first day. By the second day, if they hadn't closed it, it would have been 2/3 of the money would have been gone. You can't put flight deposits to finance borrowing. And you know, so as we speak here today, we have to recognize that banking, which has been around for what, 150 years, is gone. It's been destroyed. It's been destroyed by this. So that's interesting. Let's make this even more powerful, because I fear that we'd all agree that unless there's an extraordinary set of circumstances, that the American people are going to be presented with the opportunity to vote between Biden and Trump again.
If that's not maddening, I don't know what is.
Well, indeed. So we've just had Memorial Day, and I have to, you know, my inner consciousness is saying, choose your words wisely. But there's a bit of me that says, if that is the offering, yeah, that if you vote in that system, you own that system. You know, I'm kind of toying with the idea on Twitter, like, you've got to abstain to demonstrate your disdain. Now, people thought...
I totally agree. That's what I've done.
No.
Yeah, I totally agree.
You know, I've moved to an offshore territory I gave up, and it's rich for me to say, but, you know, loud and clear in my head, Memorial Day and stuff, you know, the veterans that died to safeguard the privilege and the freedoms we enjoy. I don't say that lightly. And so I want to say better, I'd love that we get the Musks of this world to like, voting should be done on this. I don't think you would be served Biden and Trump if you actually conducted an election via the telephone, that you actually voted on the phone. Now, I'm not saying we go to, what do you call it, a Lotto democracy, albeit, you know, could it be any worse? You know, Lotto democracy, it's the Lotto, and you nominate some plucky individual from obscurity. Would it be any worse than Trump or Biden? You know, but I would love to think that this where our the greatest inertia, the greatest blockage in our world just now is in the political system, and maybe this is a means of bringing change, much needed change. Partly what it would do, I think it would make the cost of running a lot cheaper. We should have thousands of people running, and it should be easier to filter the information. You put an AI thing on it, says, boom, this guy is dope. I mean, the Kennedy guy, he gave that Bitcoin speech. No chance. Sorry, you Bitcoiners, but you know your brother ain't going to make it. And you know why? Do you know what, when he speaks? Do you know what you hear when he speaks? You hear fear, right? You hear many things when I speak, but you don't hear fear. Now, I'm not going to be your president, right? But he ain't going to be your president because he projects fear. Wisdom, and he said a lot of smart things, but fear. You cannot project fear and become, you know, the Otimus or whatever you call them.
Well, what do you have planned for the weekend? What does Hugh Hendry do on a Thursday night, heading into Friday, and then a weekend?
Oh God! Just now, there's just no. It's a lot of work just now. But I've got wonderful, great, amazing friends, and we always celebrate the Belle Dimanche, or the Bon Dimanche. Actually, in French, it's the Bon Dimanches. The days of the week are masculine, so it's Bon Dimanche. And that is an early lunch by this beautiful private villa above the beach of Twiney, with a beautiful surf break. We play amazing music. We drink a lot of tequila. We normally go on for about 12 hours. there's a music studio, and a lot of fun to be had.
What's your favorite brand of tequila?
Oh, there's no honor in my favorite brand. I like Casamigos, the Reposado, but they
All
put,
right.
it's sugary. It's given they say it's the cask or whatever, but I'm dubious. I wish I could say something which true tequila fans would say, yeah, right on, brother. That's the right one. I mean, I don't George Clooney's. I drink George Clooney's drink. I find it fascinating. The front page today, the FT, they had P Daddy trying to take down, using race again, but he's got an amazing, or he sold to Diageo being the international drinks distributor brand portfolio, alcohol brands. Ciroc is a premium vodka, and Ciroc rocks. You can drink. It's from grape, and you can drink it neat. You can't drink vodka neat unless you're a psychopathic Russian like in Siberia. But Ciroc, you can. And P Daddy or whatever is like, you brothers, like, you ain't distributing my product. You're too busy distributing the white man, the George, and his tequila, And he's got I mean, God knows, but you can't try and buy CIROC, I think it's called. Try and buy it.
Yep.
It's pretty hard, and yet Diageo is the biggest drinks company in the world.
Got it. Well, we appreciate you coming on. Like I said, we started this with just out of a fun conversation that we always had anyway, and we named it Milkshakes, Markets, and Madness. And we've never had any guest on before. And when we decided we would have a guest, we couldn't think of anybody to represent the madness part and the markets part more appropriately than you. So appreciate you spending some time with us, and we'll have you back at some point if you're willing to do it.
Well, and Brent, I'm gonna have you here like tomorrow. Well, so tomorrow we're like in the world of podcasts and stuff, but Friday, whatever. I'm gonna.
No, I think I'm coming in August.
Yeah, I'm going to launch the launch pad, whatever the invitation. Going to go out tomorrow, and I'm inviting people to join me in St. Barths at this table. People will sit down with me, and they will tell me their deepest, darkest fears, and I will take notes. Anyway, listen, gents, thank you very much. I've had a long day. I can be incoherent. I was profoundly incoherent today. Apologies for that. You haters will have a field day, but I'll be back. This was fun. I love you guys. I love what you're doing, and let's see what tomorrow brings.
Hugh, I appreciate the time you've taken with us today. One thing I want to pop in on really quick is the movie you were referencing is from a book called Ready Player One. And I think you will thoroughly enjoy. It took him, 7-8 years, maybe longer, before he wrote the sequel, which just came out either earlier this year, end of last year, Ready Player Two. In terms of dystopian and some of the stuff that's going on with AI, I think you'll really enjoy it. And there's a lot of cultural and musical influences. So I think you'll find some entertainment in that. So definitely look into that.
Thank you for that, because whatever I was saying about the movie, I have to say that the intellectual thought that had gone in to the conception of the idea, I mean, it was very, very thought-provoking. And so the idea of a second part, and books are always better than movies, so thank you for that.
Actually, we have to ask that question before we let you go. What's your favorite book?
Anything by James Frey. A Million Little Pieces by James Frey. A book about addiction.
Oh, yeah, I've read that. Yeah.
Oh.
Yeah. Okay. Cool. Well, good stuff, Hugh. You have a great weekend.
Yeah, Hugh. So you've made this point about asset capitalists, the meaning behind it. Are there any entrepreneurial endeavors that you're putting force behind right now, or you have your own project coming up that you want to share?
I'm a broken man. I'm getting divorced. I'm splitting the assets by 50%. Like charity begins at home. I'm working on me. If I can sort me out, then I'm going to work on the rest as well. Okay.
With that being said, Hugh, I want everyone to know that they can find you at multiple places on Twitter at Henry_Hugh. You're on Instagram and YouTube at Hugh Hendry Official. I think some of the things you were talking about, this new version of Hugh that you've become since living in the islands, I think is much more on display on Instagram. And I think it's interesting that you've noticed the shift that Elon has made with Twitter. So it'll be cool to see you bringing some of that color, that artistry that you've been doing on Instagram for a while to Twitter. So wherever people are finding their social media entertainment, Hugh is in all those places. And last question, Hugh, before we let you go, is where can people get one of those acid capitalist hats?
God, yeah. Acidcap.com. I'm going to rejig. You know, like when you're not American and you don't have an American credit card, like trying to get validation on Instagram, trying to get a credit card, trying to get an internet shop is like, you guys are lucky you're American. But presently, to answer your question, acidcap, C-A-P, acidcap, and apologies, folks, they're $100 a hat. It's a preposterous price. But I've given like 4 years of my body, my soul, my mind. I poured it all out to you. I've said, like, there you go, judge me. All I'm asking for is you buy one bloody hat. It's like, you give the rich guy a tip. Give the rich guy a tip. If you get any money for the rich guy, you know.
Yeah. We'll drop you a few pennies.
Thank you.
All right, you.
Thanks, guys. I'm going to go.
Appreciate
Thank
it,
you.
man. Thanks,
Love
everybody.
Okay.
Thank you.
Bye-bye.
This show is provided for entertainment and informational purposes only. It should not be relied upon as legal, business, investment, or tax advice. Neither the hosts, guests, nor any funds they may manage intends to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies.